I have brothers-in-law, the two are like in their 40s, and these guys they're gambling fools. I don't think there's much difference between Robinhood and the gambling apps. It's, you know,
It's very similar. Some of these brokerages or trading platforms, sorry, I'll just say that, have been gamified where you get points if you trade enough, and those points give you $5 cash back, and you get a new little image on your portfolio. I'm like, that's a video game app. So, because they're trying to give you as much dopamine as humanly possible. So you're just like, I gotta
wow.
trade, I gotta trade, I gotta trade. I go like, and I was just thinking, because I was looking at one, I'm not going to name them, and I was looking at the trade platform. I was like, because I used to do mobile app development. And I used to do monetization for mobile app development. So the whole purpose was how do you keep people playing the game for as long as humanly possible and buy things in the game and watch the ads in the game and just keep them hooked because the longer they're in the game, the more you can sell them stuff. I'm like, these trading platforms, the ones I'm looking at, have been monetized and gamified the exact same way to maximize dopamine release. I'm like, technically this should be illegal. I was
Wow.
just thinking, I was like, this should all be real. I'm like, why is this not regulated? There's already so much compliance when it comes to the financials. I'm like, how are they not regulating this? Is it, oh, I guess they're okay with everyone just foolishly spending their money because they're trying to get you to, and it was all centered around impulse buying, impulse buying, impulse
Oh
buying. I'm
yeah,
like,
yeah,
eh,
yeah. Wall Street is not your friend. We have a generation of investors that was formed by 1987. You have a generation that was formed by the tech wreck, generation that was formed by the Great Recession, the financial crisis. And I'm willing to suggest that this generation with the apps and gambling or whatever, they're going to have their crash and burn moment. And then they'll go, oh, wow, I just lost a lot of money.
it's a
Yeah.
generation that learned to invest with a bunch of bad habits
Yeah.
and they're about to get a reality check. It's like, it's imagine if you just got in a car and started driving, and you're like, I know how to drive. No one told you how to drive. You started driving, and eventually you hit a sign pole or you get in a car accident. You're going, how did this happen? It's like no one showed you how to drive. You were just willy nilly driving, going fast, thinking you were good at it. You had no idea driving. You have to stop at stoplights. You have to shoulder check. You have to do all these different things in order to not hit other vehicles. You have a generation of people just driving around aimlessly with no direction and don't even know how to drive. They're going to eventually get into a crash, market crash in this scenario, or something bad's going to happen. And that's sort of how I see it sometimes.
People don't know market history. They don't want to take the time to learn market history. And for a lot of them, it's oh, well, that was then. And we've
Yeah.
evolved, and this is now kind of a thing. We've got all these technological advancements, the blah, 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 blah. Look, Wall Street cannot help itself. Go watch a movie called Margin Call. Go watch The Big Short.
Oh, yeah.
That's real. That's
Uh-huh.
real. That stuff happened. Um, and this is just go back in the 70s and read up on something called the Nifty 50. 50 blue chip dividend paying stocks. They were called one decision stocks. Doesn't matter what you pay for them because their earnings are going to go up forever. And yeah, go read about the Nifty. So this is just another incarnation. Wall Street can't help themselves. They're riding the tech boom just like
Yeah.
they rode the Nifty 50. They rode junk bonds in the late 80s. They rode the Japanese market in the early 90s. They rode the .com thing from 95 to 2000. Then they rode the mortgage back thing. I mean, Wall Street cannot help themselves, and the public, for the most part, does not take the time to understand the history. Wall Street is not your friend.
Yeah.
They're not your friend. They're not, they are not there to help you. I see these commercials, about such and such a firm. Sit down with our financial advisors and let's make a plan. No, sit down with our financial advisors and they've got a template and they're going to plug you into these uh, bar charts and pie charts, and it's going to look very scientific to you, and you're going to go, "Oh yeah, they do not give a rat's butt." Okay, so this is a business. Treat it like a business. All right, be responsible. Take responsibility for what you do, because people who say, "Well, I didn't know what I was doing and I just trusted." It's like, why?
Yeah.
Why? At what point did you? How old are you? I mean, come on. Um, yeah, it's a business. Don't don't make dumb business decisions.
Yeah, and a lot of people see it probably as like easy money or stuff like that when they get into it as well. That's a common mistake.
It's not a casino.
Yeah, and
Yeah.
one thing you mentioned before, and I was thinking about when you said it, when you applied for that job and that person asked you like what kind of investor you are, you're so quick to just say I'm a blue chip. I'm a blue chip, dividend investor. That
Yeah.
was very clear, concise. You're able to remove distractions off your investing style. I thought about that, and as you're saying, I'm like, I don't know if I can say exactly what I am right now. I'm a little bit conflicted in different methods. Obviously, my YouTube channel screws it all up for me a little bit because I'm creating content on stuff, and I think that's added to some confusion. I feel like I'm more or less a value investor in line with you, but I guess I'd say a hybrid investor, but that's still too conflicted for me. How important is it? Do you think it's good for people to at least have some level of a simple one sentence label for what they are in order to remove distractions and remove impulse buys? I mean, like, because when you have a name for yourself, you kind of have a thesis, you have a strategy, right? And I think that'll keep you kind of in line. Like, you say you don't deviate, you stay within that structure. Do you think people should try to develop something, regardless of if they want to be blue chip dividend investor? They go, even if they're like, I'm that crazy covered call person all the way, it's better to know what you are rather than be a bunch of different things and be shitty at everything, rather than, or just
It
get
it
good at one
if
thing.
if you read my book, and I'm not trying to push it, it was written in 2010, so it's 15 years old, but the first line is know who you are.
Yeah. Yeah.
It's imperative to answer your question. Do you? Yeah, you need to know who you are. You need to be really honest with yourself and say, um, these are my goals. These are my objectives. Um, and this is what I need to build in order to have the income to meet my needs in year X. So I'm going to need to put this amount away every year and earn this rate of return on it. Well, in order to earn that rate of return, I'm going to need to do this. The purpose of investing is to earn a return on investment.